Hey everybody! I think I am live for the first time ever on this YouTube channel. I thought it might be fun to start doing some live streams, see if I can kind of answer some people's questions and kind of talk about, I don't know, I guess real estate, about finance, about investing. So it's kind of my first time playing around with this. Never done a live stream on YouTube before. I don't even know how I can view comments, if there are any comments. See, I think I really need to start using some better software for doing this. It looks like I got 2 people watching now. Yeah, how do I even view comments on here? Oh man, I don't see. I'm so new to live stream. I don't even know how to do this yet. But yeah, I just thought I'd kind of talk to you guys a little bit about my opinions about the market and the current state of things in terms of real estate. I had an interesting conversation with somebody not that long ago about should we even be recommending to our clients to be buying homes right now? You know, it's kind of a crazy market out there right now. And it's if you guys are out there trying to buy a home right now, you've noticed that home values have gone way up in the last few months. And it's really common for homes to get multiple offers and ultimately sell above list price. And this has really been going on since the beginning of the pandemic. And it's kind of interesting why, right? The Federal Reserve lowered prime or lowered the federal funding rate, the rate that they are lending money to banks at. And in terms, they have then lowered the interest rates that they are lending out to borrowers. I just bought a home myself. I got 2.75% interest on that loan, which is pretty freaking crazy. And that's like unheard of just a few years ago. We have a lot of buyers in the market right now. Oh, here we go. I found my live stream. Let's see if I can look at the comments on here. So we have a lot of buyers in the market and we don't have a lot of sellers in the market, right? A lot of sellers have taken their homes off the market because they don't want to get this COVID-19 thing, especially older folks. Comments are turned off. Man, I don't know what the hell I'm doing on here. I got to figure this stuff out. But anyway, so another big factor is this moratorium on foreclosures right now. And this is actually on a state-by-state basis. I think the CARES Act had like a 2-month moratorium, but then all the individual states started implementing their own moratorium on foreclosure. So though there really have been no applications to file for foreclosure for the past 6 months or so. And what's interesting is like at some point that's going to come to an end. But that's kind of another story of whether or not we're going to have a market crash. And I'll give you my opinion on that in a moment here. But let's talk about should you even be buying a home right now. So I looked this up, and in Maryland, we have anywhere between 1,000 to 2,000 foreclosure listings hit the market every single month, typically. 1,000 to 2,000 listings a month, and we have not had any of those for the past 6 months. So that's another huge factor as to why we're seeing this really like tightening on our real estate market and why we have so many buyers in the market. And what's interesting is that as interest rates go down, typically what you see is home values go up because now for the same monthly mortgage payment, that buyer can afford more expensive home. And so they're more willing to just kind of throw money at homes. And we're seeing that right now. And what's really interesting is that the home values going up typically lags behind interest rates. So interest rates may come way down. You're not going to see that spike in home values for a few months maybe. But that's what we're experiencing right now is home values are going up because interest rates are going down so low. So there are a lot of people saying that now is not a good time to buy a home. We shouldn't be recommending that people buy a home. People are saying, oh, we may have a big real estate market crash because of all these foreclosures, all this nonsense. I'm actually not a proponent of any of that. I think right now is perfectly fine time to buy a home. What I tell people is don't try to time the market. Don't try to play these games or anything like that. And yes, you may be buying a home right now and you may be paying $20,000 more. Honestly, maybe even more than that. You may be paying $40,000 more than you would have 12 months ago. And that stings for a lot of people. But you're also getting an interest rate almost an entire percentage lower than you would have paid 12 months ago. So there's a lot of situations where your mortgage payment is going to be exactly the same as it was 12 months ago. So even though you're paying $40,000 more for the home, your mortgage payments could be exactly the same. It could be even lower than it was 12 months ago. So the home values going up are really not the big factor. Man, I wish I knew how to turn comments on this damn thing. That's frustrating. I'd love to see some of your guys' comments and get some engagement on there. But yeah, so that's kind of my take on it, is that your mortgage payment is essentially the same. And if your life situation dictates that you should go out and buy a home, if you got a job transfer, if you have a parent moving in with you, you're expecting a kid, yeah, go and buy a damn home. Know that you may have to, there's not going to be much haggling right now. There just really isn't any haggling sellers down on the prices unless they're really greedy and really overlist their home. But for the most part, it's a lot of homes are selling for above list price. So another thing, another big topic that people are talking about is, are we heading for a market crash in the near future? And this is actually a pretty interesting topic to talk about. So like I was saying, there's a moratorium on foreclosures in most states. And I looked this up of when that moratorium is going to end. And I wish I knew how to share my screen, but for most states, a lot of states have a specific date. For many of them, it's next month, actually, when that moratorium ends, and then banks can start filing for foreclosures. In Maryland, for example, though, it is, I believe it's 1 month after the state of emergency has been lifted. So we're still under a state of emergency in Maryland because of this whole pandemic. So 1 month after that is lifted, then banks can start foreclosing on homes again. And let's say it goes for 12 months. Right, I think we're about 6 months into it, maybe another 6 months or so. So what's going to happen is all of those foreclosures that would have happened during that 12-month period anyway, like just without the COVID-19, there would have been a lot of foreclosures anyway. They're all going to get foreclosed on at the exact same time. Now, because of the COVID-19 and the high unemployment rates, it's very possible that we're going to see a lot more people get foreclosed on. I think I heard somewhere that 20% unemployment rate at some point. We have millions of people getting unemployment right now. So even if a small percentage of them do get foreclosed on in the next 12 months, yeah, we are going to see a lot of foreclosures in the market. But here's the thing. It's not like as soon as this moratorium is over, we're going to have just flooded with 100 foreclosures a month in your market or anything like that. The bottleneck of that is going to be the banks, right? Just because they have 10 times as many foreclosures doesn't mean that they can process 10 times as many foreclosures. They're not going to hire 10 times more staff to process all those foreclosures, especially if they're hurting financially as well. So that's going to be kind of the bottleneck. And what I think instead is we're going to see a lot of foreclosures, and we're going to see them continuously entering the market for maybe 12 months or so. So it's not all foreclosures. You're not going to have, 1,000 foreclosures hit. Well, you may, but it's not going to be a flood of foreclosures. It's going to be a higher percentage than normal, and it's going to be kind of spread out over a long time. But we are in such a unbalanced market right now. We're in such a seller's market where we need more inventory. We have way more buyers in the market than we do sellers. Even once we get a huge influx of short sales and foreclosures, we're not going to even be able to keep up with the number of buyers in the market right now. I mean, at best, we may get into a balanced market, but it would take a tremendous amount for us to have far more listings than we do buyers. Like, I do not see that happening. And I'm researching a video right now, and I'm going to actually break down those numbers of like how many. It'd be a ridiculous amount. You need like 10,000 foreclosures a month hitting the market every month just to kind of feed the beast and feed all the buyers in the market right now. And so because of that, I really don't think that we're going to have a big market crash or anything, right? This is buyers, this is sellers right now. At best, we may get into a balanced market. And in a balanced market, home values are going to kind of level out. They're not going to keep going up. They've been going up nonstop since 2008. So 12 years, they've been going up nonstop home values. And then lately, they've been really going up. So at best, if we get into a balanced market, we reach that equilibrium, then the home values will just kind of level off. And another factor is that the Federal Reserve has said that they are going to keep the federal interest rate really low. They said for the next 3 to 4 years. And I think interest rates are actually going to drop even further than they are right now. So they lowered their interest rate down to pretty much zero. And that's the rate that they lend to the banks. Now, the banks don't instantly lower mortgage rates down to zero because they want to make a profit, right? Where that difference is how they make a profit. So what they initially did is they dropped them from about 4% down to like 3%. They had so many buyers trying to buy homes and refinance and lock in that 3% interest rate that the banks could not keep up with that. The mortgage lenders could not keep up with that. And what you saw was they then raised their interest rate so that they had fewer clients. And it sounds crazy, but I know many, many lenders that this is exactly what they did. They were so overwhelmed with refinances, and they don't make as much money on refinances as they do on purchases. But they then just started charging these people more money so that they could keep making money but work with less clients. And so that's what we saw. We saw mortgage rates drop, and then they went back up to about 3.5%. And then now for the past like 3 months, they've been slowly going back down. And now what we're starting to see is rates right around 3%. VA loans, FHA loans, we're seeing them at 2.75% on a 30-year loan. On 15-year loans, I've seen 2.5% interest rates. I've seen a few people claiming that they have below 2% interest rates, but that's really with them charging you points. Points is kind of a whole nother thing, man. Points are pretty much a scam. Don't bother buying points on a mortgage. So if you're not familiar with it, when you lock in an interest rate, so let's say you get 3%, right? You can pay the interest on that loan up front, and then you get a lower interest rate. These are known as points. And so it may be, you pay $7,000 and they'll drop your interest rate from 3% down to 2.5%. And you may be like, well, that's a great deal because, it's 30-year loan on a much lower interest rate. But really what you need to look at when you do that is what is the monthly savings? So let's say you pay $7,000 and you reduce your mortgage payment by $50 a month because you get a slightly lower interest rate. You need to figure out how many years of paying your mortgage until you break even on that $7,000 investment. And let's say it's like 8 years, right? You guys can do the math. $50 a month, let's say it's $7,000. I'm making up these numbers, but it's always a pretty long time. It's like 7, 8, 9 years for the most part. The thing is, though, that the average homeowner only lives in their home for 7 years. And the average mortgage is only in effect for 5 years, a little over 5 years, because people refinance or because they sell their homes. So unless you know for a fact that you're going to live in that home for the next 20, 30 years, buying down the points is really not worth it. It's just one of these scams that the mortgage lenders run on you. So you typically don't recommend that. But my point was that you do see some 2% interest rates right now, but it's with you buying points, which I really don't recommend. But yeah, anyway, guys, this is kind of my thoughts in the market right now. That if you wanted to buy, I just bought. Okay, let me give you another crazy theory that I have. So I just bought a house myself, and despite the fact that I could make a significant down payment on it, because I was getting 2.75% interest rate, I pretty much financed as much as I could on that house. And so there's a big concern right now with inflation, right? Inflation is really misunderstood for the most part. People don't really kind of grasp that, and it's hard to grasp that your money loses value. So if you have $10,000, let's say $100,000 in the bank, this time next year, it's going to be worth 2% less. You lost 2% on your money just by keeping it in a bank. So 12 months from now, it's only going to be worth $98,000 of today's money, right? That's inflation, and it sucks. But the last 10 years, or the last 50 years, we've seen an average of 3% inflation. In the last 10 years, we've seen an average of 2% inflation. And there's a lot of factors playing in inflation, but one of the biggest levers is how much money the Federal Reserve prints, right? They just print money, throw it into the ecosystem. And when they do that, everybody's money loses a little bit of value. So they recently printed trillions of dollars, something crazy like $5 trillion in 2020, additional money just to kind of help out with the stimulus checks and everything else. So a lot of people are really predicting that we're going to see hyperinflation. We're going to see inflation rates jump up to 4%, 5% a year, where your money's literally losing value. Now, one of the coolest ways to make money off of inflation is to take out as big of a loan as you can on as long of a timeline as you can. And you see corporations do this all the time. They'll take out like $100 million and say they have to pay it back in like 50 years. And this is super smart because they're actually benefiting from inflation. So let's say you bought a home in 1990, so 30 years ago. And let's say it's a $400,000 home today, but 30 years ago is only worth $10,000. And let's just say $100,000 in 1990. So let's say your mortgage payment was like $800 a month, probably like $600 a month on a $100,000 home in 1990. 30 years later, today, you'd still be paying that mortgage, 30-year mortgage, but you'd be living in a $400,000 house, but you're still only paying the $100,000 home mortgage of like $600 a month, right? And this is like pretty, it's kind of hard to explain, kind of hard to wrap your head around, but you're locking in that fixed rate mortgage for the next 30 years. And as inflation goes up and home values go up and everything goes up, your mortgage payment stays the same. And like relative to the home value, it's incredibly low. And anyway, taking out as much debt as you can on as long of a timeline as you can, as long as you get a really low interest rate, is a fantastic way to take advantage of inflation. And home values, they typically appreciate 3% a year, sometimes more. Home values almost always outpace inflation. Over like the last 100 years, they've outpaced inflation like 95% of the time. So, if you bought that $100,000 home, it would be worth $400,000 today. But anyway, so that's kind of why my thinking behind why I took out as large of a loan as I can, to kind of protect myself and kind of benefit if we do see hyperinflation in the market. So anyway, that's probably a good place to end this. Yeah, it's kind of cool. I got to do more live streams like this. I got to figure it out. I don't even know how to turn comments on this thing. I see I got 14 of you guys watching. I wish I could talk to you guys and interact and answer some questions, but I guess I think I got to get some software or something to use with this. I've got a fancy camera and I got a fancy mic. I don't know what the hell I'm doing on this thing. All right. Yeah, that was fun. I could ramble on all day about this kind of stuff. I'm pretty, I got an analytical brain. I like over analyzing numbers and things like this. But okay, guys, hey, if you're watching this and you're not subscribed, make sure you're subscribed to my channel. All right, I'm signing off.